Great. Get started. More can join as they arrive. Thank you, everybody, for taking the time this afternoon to look at the changes to the employee retention credit. We want to make our clients as aware as possible of this credit offered as originally part of the CARES Act and now revised under the Consolidated Appropriations Act. It's a real benefit, and there's a significant amount of tax credit that can be garnered by it. So a lot of changes in the past few weeks to it. So we just want our clients to be as aware as possible of those changes. My disclaimer up front is that this is not legal advice. This is not accounting advice. We very much recommend discussing with your trusted advisor whether you are eligible to receive this credit or not. We're going to go over the eligibility in great detail here, but ultimately the final decision must rest with you as the business owner. So certainly talk with your CPA as to whether you do qualify for this credit. But we'll get right into these details here. Also, just housekeeping note, if questions come up, please don't hesitate to use the chat window to express those questions. Matt will stop me and ask those questions just so we have audio continuity throughout. So please use the chat to your heart's content, and let's get those questions answered. Don't hesitate to ask them because I will gloss over some stuff. So happy to help, just don't hesitate to ask those questions. All right. So the employee retention credit, we'll refer to it as the ERC, was originally enacted as part of the CARES Act. The big factor there was you couldn't participate in the ERC if you got a PPP loan. So the vast majority of our clients went for the PPP loan. It was a bigger benefit in most cases, and you couldn't do both. So we only had a handful of clients initially that took advantage of the ERC. It is a payroll tax, it's fully refundable payroll tax credit that's reconciled through your quarterly 941 that we file on your behalf. Qualified wages for the ERC were from March 13th of 2020. This is part of the original, and I'll get into the 2021 details here a little later. March 13th through the end of 2020. And it was a fully refundable payroll tax credit for up to 50% of employee wages up to $10,000 in wages per employee. Breaks it down to $5,000 per employee for 2020. To qualify for this credit, one of the two scenarios have to occur. One, you have to have operations that were fully or partially suspended during any calendar quarter in 2020 due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings for commercial, social, religious, or other purposes due to COVID-19. We'll get into more detail on what exactly that means and what qualifies. Or you have to have experienced a significant decline in gross receipts during the calendar quarter. In 2020, and these, even with the revisions, the computational aspect of this qualification remains the same. In 2020, you have to define as a decline of more than 50% in gross receipts during any calendar quarter. I'll get into that. It's 50% is the initial qualifier, and then you qualify until the end of the quarter where your revenues go back over 80% of what they were compared to the same quarter in 2019. Very confusing, but I think the important thing to note is if you were either had your business operations fully or partially suspended due to government orders, or you had a decline of 50% in revenues in one quarter, you're probably going to qualify for this. You're definitely going to qualify for it.
First question, Ryan, has to do with full-time or part-time employees. Does part-time count?
Part-time does count, yes. Part-time employees, total wages. The only exclusions that we've seen on this is self-employed individuals and relatives of self-employed individuals are not eligible. However, and as with all of this, the determinations are very vague. With these COVID stimulus packages, they've been rushing to get them out, and they're not giving us the detail that we're used to seeing for obvious reasons. It's a rush, right? So it leaves a lot of area for interpretation. The self-employed individuals, to me, indicate someone who's paying self-employment tax specifically. So if your business is a corporation, an S Corp or a C Corp, and you're an employee of that, I would think that you are eligible. But again, there's just a lot of shades of gray on that. It does specifically reference, even if you are an S Corp or a C Corp, relatives of an individual, of an owner of a business are not eligible. But otherwise, part-time, full-time, everyone's eligible. What does full or partial business shutdown actually mean? Orders, proclamations, or decrees from the federal government or any state or local government are constituted as orders from the appropriate government authority. Statements from a government official, including comments made during a press conference or interviews with the media, do not rise to the level of government order for purposes of the employee retention credit. A good way to think of this is documentation, and that's what you have to prove. What order from the government entity that your business has to abide by, and you can keep that documentation and reference it later if you ever get questioned on whether you qualify for this full or partial business shutdown. What is documented from any authoritative government entity, so it could be local, as long as it's in writing. I won't get into all of these details here, and I forgot to mention we'll be happy to email out this presentation to anyone that wants a copy of it, so you can reference these slides at a later date. And of course, we're always here to support should you have any questions, but the examples here below highlight it pretty easily. The governor of the state orders that all non-essential businesses must close between March 20th and April 30th. The order provides a list of what businesses need to close. It's in writing. That's a shutdown, right? That's a partial shutdown. And technically, you only qualify if it's a full shutdown. So in second quarter, when your business was not allowed to be open for a month, technically, you only apply for this credit. You're only eligible for this credit during that shutdown, during that portion of time when you were fully shut down by the government authority. Partial shutdown is obviously much more open. And we've had there's some interesting analysis that's come down from this, but again, it leaves a lot to interpretation. An example of what would not work is if mayor of a city holds a press conference and encourages people to not go out to dinner. That does not qualify. Again, it's not in writing. You can't prove it. It's not referenced back. Should be pretty straightforward there. One particular hot button for me, well, two particular hot buttons are gyms, right, and restaurants. BDO, which is a international accounting firm, has weighed in on the restaurant application specifically. And again, touch base with your CPA on this, but partial suspensions may not always be obvious. For example, modification to meet social distancing requirements can constitute a partial suspension if the restrictions have more than a nominal effect on business operations. Restaurants should consider the impact mandatory table spacing has their business when determining whether or not they're subject to a partial shutdown. Here's a link to that article if anyone needs it. Again,
Ryan, got another question. If the business ended up having to close permanently due to COVID, can you apply for the credit for the time the business was still viable?
Yes. If wages were paid during that period when it was shut down, you can apply. Yes. Great example of this is in Ohio. And again, I think restaurants and gyms are certainly obviously most affected and where the partial shutdown can come into place. The full shutdown is pretty straightforward. If your business was mandated to close for a given time, you are eligible for this credit during that time. Now there's a caveat to that. If you got a PPP loan and you use the wages paid during that shutdown towards your PPP forgiveness, you can't double dip, and those wages can't apply to the employee retention credit. Partial government shutdown, this is a good example of a documented Ohio-based order that customers and guests of a restaurant Ensure a minimum of 6 feet between parties waiting and when dining. If not possible, utilize barriers or protective devices. If that, and again, it's up to individual analysis, if that has more than a nominal effect on your business operations, the logic is you could qualify as a partial shutdown for the entire period. Certainly something to consider, certainly something to discuss with your CPA. Again, we're looking at the very end of first quarter of 2020, second quarter of 2020, third and fourth, which is these 2020 rules. And again, you can't use wages that you use for PPP loan forgiveness towards the employee retention credit. This to me, and again, speak with your advisor, this to me indicates that if table spacing and your inability, and you can't have as much staff as you could because you can't conform to social distancing requirements, that to me could constitute a partial shutdown for the entire period, which would mean your wages paid from March 13th through the end of 2020 could all be eligible outside of what you used for your PPP loan forgiveness wages, could all qualify as a business shutdown. The significant decline in gross receipts in 2020 testing tool is defined, as I mentioned, 50% in gross receipts in a calendar quarter compared to that same quarter of 2019. So if in second quarter, you were down more than 50% in revenue from second quarter of 2019, second quarter is an eligible quarter. However, if any of those wages paid in second quarter were used to PPP loan forgiveness, those wages specifically in second quarter have to be excluded. If you were down 50% in second quarter, and that decline kind of continued to third and fourth quarter, the significant decline in gross receipt ends with the first calendar quarter that follows the first calendar quarter in which the employer's 2020 quarterly gross receipts are greater than 80% of its gross receipts for the same calendar quarter of 2019. That's not confusing at all, I know, but this example highlights it pretty well. So if an employer's receipts, total revenue, were $100,000, $190,000, $230K in Q1, Q2, Q3 of 2020. In 2019, there were $210,000, $230,000, $250K in Q1, Q2, Q3, 2019. An employer is then down approximately 48% in calendar one, 83% back up over that 83% in calendar two, and then 92% in third quarter. This business would be eligible for second quarter because it was down greater than 50%, and then ends at the end of, I'm sorry, this was first quarter. The 48% drop was, or 52% drop was in first quarter in this example. So first quarter would be eligible. Second quarter would be eligible, but it ends at the end of second quarter. Very confusing. Any questions on the revenue test for 2020?
Can you include multiple quarters with a break? For example, second quarter shut down, third quarter revenue greater than 80%, but shut down again in quarter four?
Technically, any shutdown would be eligible, but just for that time frame that you were shut down.
Hey, this is Marty. I have a quick question. What about if you have excluded income from, let's say, the triple P over $10,000 or what the threshold might be? Can you then apply that for this particular loan?
It does say if it's used for forgiveness. So my interpretation is that is over income that's over the threshold for PPP loan forgiveness is not used for forgiveness and then could be applied to the employee retention credit.
Thank you.
Definitely recommend you get first PPP loan forgiven prior to getting into this. The nice thing about this credit is that it is reconciled on the 941, and we can amend your 941s at any time. So this isn't necessarily a quick hitter that we have to get done. in a certain period of time. You know, your 941s for last year have already been filed. So we're going to be amending them anyways if this credit does apply. So it's certainly something you want to take your time on. Make sure you can justify if you were ever to get questioned on it. And we're, of course, happy to advise you through, you know, kind of these details, but certainly speak with your trusted advisor as to whether you do apply. And then we can do those amendments, and you get, like I said, there's no time frame for when you can grab these credits at this point. We're still waiting on future guidance. They're still going to release guidance on overage of wages. We had a lot of clients that when applying for their PPP loan, they had plenty of wages to get the entire loan forgiven. So on their forgiveness application, they just used all those wages. They didn't factor in rent, utilities, or other forgivable expenses. So now, if they had, and of course this has all changed since then, this wasn't available when a lot of these clients applied for forgiveness. There's a question of, well, I could have used all these wages towards employee retention credit because I was partially shut down during this whole time, but just to get my loan forgiven, I used 100%. The IRS is supposed to still be issuing guidance on what to do in those scenarios. Questions? So that kind of summarizes employee retention credit in 2020. Again, if you find that your business is eligible, we can amend all of those returns and get you this credit, and it'll be a refund directly from the IRS. This certainly adds up, as you can imagine, from the dollar amounts. You know, if you had 10 employees, each making over $10,000 in eligible wages in 2020, and you qualify in a quarter or for the whole year, that's $50,000 in credit, and that would be a direct refund from the IRS. So certainly something to get into for 2020. For 2021, they open it up significantly, and it's a much greater benefit. Instead of, this is for first and second quarter of 2021, it's a fully refundable payroll tax credit of 70% instead of 50%, up to $10,000 per quarter instead of for the year. So the max credit is $14,000 per employee. They've also reduced the eligibility requirements from that 50%. The same fully or partial government shutdown, suspended because of government shutdown, mandated closure. The revenue testing is just down 20% instead of 50%. So it's a big change. So if your business is going to be down 20% in first quarter compared to first quarter of 2019, you will be eligible for this credit here in first quarter. And it's 70% of wages up to $10,000 per employee per quarter, and is reconciled on the 941. There is max employee tests to think about prior to, if you had greater than 100 full-time equivalent employees in 2019, the rules change a little bit in 2020. In 2021, it's less than 500 full-time equivalents in 2019. And you've got to explicitly be paying someone not to work. I hesitate to bring this up because I'm not sure how many people on this call right now had greater than 100 FTEs in 2019. But if you did, certainly something to consider, and certainly something to follow up with us on, or speak with your CPA about it.
Yep. Ryan, got some questions. Okay. Will the presentation be available via recording? So I'll email everybody that registered the slides. If you want a recording, I'll put it up on YouTube, and I'll send a link to that if people want the recording. But if you want the record, I'm not going to send it out to everybody that registered. So if you can type in now your email address, if you want the recording on YouTube, I'll send that to you. So type that in the chat box now if you want a copy of the recording. And then some other questions. Is this something we apply for through our tax return, or do we go through our payroll company?
Payroll company.
is this eligibility an either or both conditions have to be met?
Either or.
And then could you repeat what you had said about whether or not a self-employed person of their own S corp is eligible or not?
So that is the documentation. And again, we have such a small amount of documentation on this and really all the stimulus packages. Normally, most of our understanding of how this works is in the frequently asked questions portion of the IRS, which is really unusual for our type of tax work. Normally, the amount of documentation we have is unbelievable. But so it does reference specifically self-employed individuals, wages for self-employed individuals are not eligible. IRS has very specific rules on self-employed individuals. And as I read it, again, talk to your CPA, that means anyone paying self-employment tax. So that would be an LLC taxed as a partnership, a sole proprietorship, when you're not on payroll as an owner. That's what that says to me. However, it very explicitly states relatives, wife, son, daughter, uncle, those wages are explicitly excluded, not eligible for this credit. And they also outline even if it's a corporation. So as I interpret it, self-employed individuals are not eligible. Relatives of owners of businesses, those wages are not eligible. But there is certainly, it leaves the door open for employees of an S corp, owners that are on payroll of an S corp or C corp. But again, you'd have to really discuss this with your CPA. Ultimately, the business is responsible for the accuracy of its 941 filings. We're happy to assist, but it's so very vague. Please make sure your CPA is comfortable with whatever decision that you do make.
All right, got a lot of questions on the refund. So if you're due a refund, will this potentially, will you get the cash up front or just a tax credit to use up later? How does that work?
Cash. It is a refundable payroll tax credit. So when we amend your 941, say you have eligible wages in second quarter of 2020, we do that amendment, the IRS will refund that cash directly to your business.
And as we work through this, do they just email their processor, give you the
Yep,
dollar
I'm going to touch on
amount?
this. I'm going to touch
Okay.
on this a bit more here.
Okay. And then, okay.
I've got a summary of the differences, and interrupt me, Matt, if there's more questions specific, but I'm going to touch on the process that we need to get this information. But again, the summary here, 2020, we're just hearing about this now because everyone got a PPP loan, right? And that's what's changed in the past few weeks, is before you couldn't do both. Now you can, and it is retroactive back to March 13th. That's why this is such a hot button right now. You can do that even if you got a PPP loan, but you cannot use wages used to forgive your PPP loan towards this credit. Again, if you complete forgiveness and you have a good documentation of what wages, if you got a report from us, I'll touch on this a bit more, of the exact time frame of the wages, and you submitted that to your lender when you got your PPP loan forgiven, we can exclude those wages in that time frame specifically, and then calculate for you how much employee retention credit you get. 2020, it's 50% wages per employee up to $10,000 per year, or $5,000 per employee for all of 2020. Qualified wages are March 13th, the end of the year. Less than 100 employees, all wages qualify. Greater than 100 full-time equivalent employees, and this is in 2019. If you had greater than 100 full-time equivalent employees in 2019, only wages that you paid to an employee not to work qualify. Eligibility, again, must be fully or partially shut down by government order. Partially shut down certainly leaves the door open for interpretation on what partial shutdown is what signifies a partial shutdown, or the revenue test. If you're down 50% in a given quarter compared to the same quarter in 2019, that quarter is eligible, shutdown or no shutdown. If you're down greater than 50%. Again, if wages in that quarter were used for PPP forgiveness, you can't apply them to employee retention credit. If your wages were then, if you're down 50%, and then subsequent quarters, you're eligible until the end of the quarter where revenues go back up over 80%. So say I'm down, again, my example, I was down 52% in Q2. That quarter two of 2020 compared to 2019 is eligible. I'm down 17% in quarter three. That means quarter two and quarter three are eligible, but in quarter three, I went back up over 80%. So at the end of quarter three, no longer eligible, fourth quarter, not eligible.
All right, we got some more questions kind of going back a little bit. First PPP loan, I used wages, but I did have other things I could have used. Can I go back and amend my first forgiveness loan to try and get these credits?
They're supposed to release guidance on that. They have not said anything about it, but that has been the first question in my mind and many others' mind is, wait a second, I already used these wages for forgiveness, but I didn't have to. They're supposed to release guidance on how to handle that. If your lender will let you amend that forgiveness, certainly I would say that would work. But again, I don't know how many lenders are at that point. And the IRS explicitly states that they will release guidance on that.
Does this tax credit result in the company losing a deduction?
What type of deduction? Oh,
on the wages.
No, like the PPP loan, it does not. Like they changed the PPP loan, they changed the employee retention credit as well. They do not result in the loss of a tax credit. It was also part of the Consolidated Appropriations Act, was both of these. Initially, they were going to be the reduction in what you could use those expenses. You couldn't use those expenses, those wage expenses, towards a deduction on your corporate tax return. They've changed that for both.
And that earlier question, I don't know if you've hit it yet, is so if you figure this out with your CPA, you know your amounts. How do you want clients to communicate that to the processors or tax department? So really, all we will need to amend your 941 is an email from you saying, I was eligible second quarter, third quarter, whatever it may be, what quarters you were eligible, and then what time frame you used wages for PPP forgiveness. Just that. If you email us that, so we have it in writing, that you are eligible, spoken with my CPA, I'm eligible for second and third quarter, wages paid from April 15th to July 15th were all used for PPP loan forgiveness. So exclude that time frame. We can do the calculations and the amendments on your behalf. So it's important to know for 2021, we can capture this in real time. They're even supposed to release guidance on how to apply for this credit in advance. If you think your business either, again, the partial shutdown, which is very vague and leaves that door open, or if you anticipate being down 20% in first quarter compared to first quarter of 2019, you're going to be eligible for this credit here in 2021, first quarter and second quarter. And again, the credit amount goes up. They're supposed to be releasing guidance on how to claim that credit in advance, but if they don't, on your 941 that we file on your behalf, we'll just need to know that you are eligible at some point in first quarter. We file your first quarter 941 in April, so when you tie up your numbers after March for the first 3 months of the year, and if you're down greater than 20%, you let us know that. We get it done on your original 941. You get that money back from the IRS in a couple of weeks because there's a refund due from your 941 filing. Okay. If we have to amend anything for 2020, we've seen companies trying to charge a percentage for this credit. And to me, it's just taking advantage of a bad situation. If we have to amend, it is quite manual on our side. So we're going to charge our normal amendment fee for any time we amend a 941 of $150 per quarter. Again, it's just very manual on our process, but going forward in 2021, we know with that original filing, there's no charge. We're going to help you do the calculations. All we need to know is that you were indeed eligible.
Also, something very much to think about with 2021 is the second PPP loan, because I imagine that the rules are going to work very much the same. Wages used for your second PPP loan forgiveness will not be eligible for this credit, and there's no double dipping. So certainly something to plan for from an accounting perspective, and make sure that rent, utilities, other expenses are used towards that forgiveness, just to make sure that you have the room, wage space to apply for this credit as well.
A quick question. This is Marty.
Yeah.
Are there any? I'm assuming there are no caps like there were with the PPP. Whatever comes in, they're gonna put out. Meaning maximum allocated dollars, like the original PPP loan.
Max, I mean, there are wage caps on what you can claim for the employee retention credit.
I'm talking as the program as a whole. The initial PPP was $600 billion, for example.
No.
Is there a cap here?
No, because this is a refundable payroll tax credit, you're reducing the amount of payroll taxes that you owe. So when we do an amendment for, let's say, 2020, it's a reduction of that payroll tax. So it's not an allocated set dollar amount that the SBA has to divvy out. That's a very good point, Marty. No, it is a refund on payroll taxes that you have already paid. And it's a refundable payroll tax credit. So even if you had more in credit than you did pay in payroll taxes, they will refund the remainder to you. The verbiage on that is very odd, because you hear payroll tax credit, you think payroll tax. But if you exceed what you had in payroll tax for the quarter, you get a refund of the rest.
Thank you.
Mm-hmm.
Got a good question for you. This one, I don't know if you're going to know this one. Are wages treated any differently for employees who had to be paid because they're on COVID quarantine?
Yes, can't double dip again. Same thing. If you got the FFCRA payroll tax sick pay credit and you processed that through us, essentially, that was if you had someone sick with COVID credit, you reported it to us as, we called it emergency sick leave. You got credit for that on your 941. It reduced the amount of your 941 payment. So essentially the IRS was paying that employee on your behalf. You got it. It's 100% credit for up to 80 hours if that person was on quarantine. Those wages cannot be used towards the ERC credit. That again would be double dipping. What other questions do we have?
I just had one private question. Other people might have it too. Is can they just send this to their normal contact,
Yes.
their info? They don't
Yes.
need to send it to anywhere special?
Yep, just send it to your payroll process.
This is Roger. I may have missed this earlier, but we have a lot of part-time employees. Would those be qualified wages?
They would be, yes.
So part-time is okay then?
Part-time, as long as it's a W-2'd employee. Independent contractors are not qualified wages, but yes.
Part-time W-2, that's the definition, is part-time. If they have a W-2, they're good then.
If we're withholding tax, we're paying them, we're withholding tax. Yep, their wages are eligible, yes.
If I could ask another question, and
Sure.
you spoke to it earlier, but I want to confirm it. I'm the father and I own 80% of an LLC.
Yep.
I have two sons that work in the business, W-2 employees that are also S-Corp owners. Would theirs be qualified wages?
My interpretation is that they would not be qualified wages. But again, it's so vague because the amount of documentation that we have on this from the IRS is so minimal. And it's all like everything else, COVID stimulus related, subject to change. So just like this. But as I interpret what's there now, they would not be eligible.
That's probably a good CPA question, it sounds like.
Absolutely,
All right.
sir. Yes.
Thank you. This is a good seminar.
Good. It's a real credit. It's it really adds up as you start doing those calculations. Definitely something that everybody that can take advantage of should take advantage of. But make sure you understand what you're getting into, speak with your CPA and make sure they're in agreement with what you want to do. And we handle the processing. Again, this credit is claimed on your quarterly 941. Can't use PPP loan. That's an excellent question on the FFC, Families First Coronavirus Response Act. Sick pay credits, cannot use those as well. I didn't reference that here, so that was an excellent question. And that brings us to the end. What other questions do we have on this? Can I answer? Matt, do you see anything else coming through?
Nope, they're quiet. You've informed them so much. They're just thinking about it all.
All right.
Hey, Ryan, this is Marty again. I just wanted to follow up with Roger. I thought this was very well organized and very helpful.
Good.
And, I'm going to probably share, once I get the link, I'm going to share it with some other folks. So
great.
You guys for putting this together.
Our pleasure. Our pleasure. It's been moving fast. This was just signed into law on the last days of 2020, and the past few weeks, everyone's been trying to interpret it, what the hell it means. So, excuse me. So now that we feel like we have a good handle on it, we just want to make sure everybody's aware. And yeah, we'll email out the slides and a link to the presentation on YouTube. And certainly we can be reached at info@payoptions.com, or our number here referenced below, or your payroll processor. And we're happy to help you work through it. We want to make sure all of our clients get as much benefit from all of these programs as possible. So anything else on the questions front?
If anybody has anybody else, whether they're a client of ours or not, we will be opening this presentation up to non-clients. So if you guys know anybody that would benefit or have a lot of questions on this topic, feel free. You guys have my email, Matt Flynn. I'll make sure I follow up with them and get them invited to our next webinar, or get them whatever resources from this webinar, whatever that individual might need. So just let me know.
Hey, Ryan, this is Marty again. I just have one question. This might be the exception to the rule of a stupid question. There are no stupid questions, but just to be crystal clear before I start getting cited here. So if any employee, let's say you had 4 employees, each made at least 10,000 qualified wages, you'd be getting a $20,000 credit for last year? No.
$5,000 credit.
5,000. Yeah, per person though, if I had 4 people.
Yes.
And it doesn't have, okay. And then this year we'd get 7,000 per person.
Per quarter. So up to $14,000 per person. It is real money, no doubt. And in 2021, you only have to be down 20%, which I imagine a lot of businesses, we're still going to be down 20% first and second quarter compared to first and second quarter of 2019. So the max credit, if you're down greater than 20% in Q1 of 2021 or Q2, but if you're down both 20% in the first half of the year compared to the first half of the year of 2019, you paid someone $10,000 in first quarter, $10,000 in second quarter, you get back $7,000 in first quarter, $7,000 in second quarter. Again, if there are enough eligible wages for that. So that's max of $14,000 per employee.
And then last year it's the 3 quarters, correct? So it would be a maximum of 15,000.
There is that sliver. Well, I'm sorry. In 2020, it's 5,000 for the year.
For the year, gotcha. Okay.
Yes, it is just a max $5,000 for the year is the max. But yes, if you had 4 employees and they each had $10,000 in qualified wages that were not used for FFCRA sick pay credits or PPP loan forgiveness, then yes, you would get $5,000 per employee back, or $20,000. Yes.
Thank you.
No problem.
Ryan, we do have a question kind of that spurred some of the stuff you're talking about with COVID credit on 941. I think we have a client that had some salary employees that they did pay sick time to, and they didn't even, I don't think they knew about their ability to get the 941 credit. So they're asking, do they get credit for that?
It can't be amended. Absolutely. You've got to have appropriate documentation for that sick pay, but absolutely, we can still amend 941s and take advantage of the sick pay credits. And we've emailed some guidance on it. Obviously, emails get lost in the shuffle. Spam blockers get lost in the shuffle, cause emails to get lost in the shuffle. But yeah, the FFCRA sick pay credits, it's up to 80 hours. And I know I'm digressing a little bit here, up to 80 hours with cap of 5. If someone is sick specifically with COVID or on a doctor mandated quarantine because of COVID, it even references that they don't have the ability to work from home, which, you know, kind of changes things a little bit. You can get up to 80 hours of sick pay credit, up to $511 per day per employee, refunded back to you. And yes, the 941 can be amended and that credit can be realized. So email the details to your payroll processor. We'll weigh in, we'll help you through it, but absolutely. If they were sick, if an employee was sick directly, it's up to 80 hours with COVID. If they had to care for someone in their immediate family that was on a mandated quarantine for COVID, you can pay another 80, or you can pay 80 hours for that. The max is a little less. It's a max of $200 per day. And then there's an expanded FMLA. These sick pay credits do extend into the first quarter of 2021. So yes, if you have an employee that's either sick with COVID, has COVID symptoms, is seeking a diagnosis, or mandated by a doctor to quarantine, then yes, you can get credit for their time. So please do send that information over to your payroll processor. We'll help you evaluate it, tell you what direction we can go in. And it's absolutely not too late. We can amend returns and get you that credit.
One client said their bank hasn't even begun their forgiveness process yet. Is that unusual?
I'm going to say no. It's a little late, but I'm not surprised. On the PPP, I'm going to digress here a little bit, and I'm not a lender, but technically you don't have to start paying the PPP back if you don't get it forgiven until the loan matures, which was 2 years after the original loan date. So I wouldn't panic at this point, but I would ask your lender, certainly. Any other questions? And certainly, second round of PPP, if your business was down greater than 25% in any calendar quarter in 2020, so many percentages, so many numbers, sorry about this, compared to 2019, you can apply for a second round of PPP. Discuss with your lender. It is also important to note on that second round of PPP, your NICS code, which is your industry code, if it begins with, I believe it's 762, which is restaurant hospitality, you can get 3.5 times monthly salary or monthly payroll expense in the second round of PPP, and otherwise it's 2.5 times, but discuss with your lender. Any other questions? Anything else we can help with at this point? All right. Always available. Happy to help however we can. Thank you all for taking the time. We really appreciate your business, and have a great weekend.